Hello, good morning, everyone. Excuse me. I hope you're all doing well. It is April. What April is it? Let's see, April 9th, right? It's Tuesday, April 9th. Anyways, Tuesday, April 9th. I hope you're all doing well. Let's get ready to see what we have in terms of the market and what's going down. Some of the news that's coming out because yesterday was the one of the lowest total volume non-holiday days in the last several years, right? It's been years since we've had this extremely low volume in the market that's not been a holiday session. So we're in a period right now where we had a very strong downside move that shaped up last week towards the end of the week. And we're coming into inflation data tomorrow. We got the CPI data that everyone's going to be leering at, everyone's going to be waiting for and looking for. And a lot of that lack in volume can be attributed to the news that's coming out that we have in expectance, right? We've seen multiple sessions just rotate sideways in this range where we're in a limbo for the buyers and sellers overall. So as I see this, we have some sideways rotation outside of a distribution where the buyers aren't necessarily super happy with what's going on, and the sellers, they're running out of steam, right? We've seen a year that's just been constant, long. The projection has been higher, and we've yet to see any significant pullback that even comes close to 5%. Now, a lot of analysts, traders, investors alike are looking at this market right now on multiple sessions to the upside swing without any minor pullback even, and looking at it and thinking, this is the chance, right? This is the chance that the bears are going to have to secure some kind of pullback before one of the craziest dip buying opportunities comes in for the buy side based on what we got going on. So as we shape things up, we're coming into a very heavy news event towards the end of this week, middle of this week, towards the end of this week. Tomorrow, CPI, PPI on Thursday, and then we wrap things up. So, will that inflation data press this market a little lower to get the beginning of something that's more reasonable on a pullback, right? That's the big question that we're looking at right now. And based on how markets are moving, the low volume, the failure to accept higher, the constant range, right? The sell pressure that comes in throughout the day, there is speculation that we can potentially see higher inflation data yet again, right? So over the last 2 months, we've been uh, we've seen signs of slight, right, increase in inflation that people are expecting to see continuation of that. Remember, at some point, Jerome Powell, Janet Yellen, back in the day, were talking about inflation being transitory. Now Jerome Powell is really pushing forward that this inflation, this period of increased month over month, year over year inflation over the past two readings has been seasonal, right? Is seasonal the next transitory? That's the big question. So JP Morgan's Jack Manley actually believes that higher rates equals higher inflation, right? Interestingly enough. You slice and dice inflation, whether you're looking at the headline number, whether you're looking at the core number, or you're removing the goods equation, so much of it has to do with the rate environment. That's what he explained. Adding that there won't be downward pressure on inflation until shelter costs cool down. With recent inflation reports surprising to the upside, markets are now pricing in 2 rate cuts this year, and we'll see what that brings us. Because remember, at the end of last year, they were pricing in 7, right? Now the probability is more skewed to 2. We'll see how that pans out. In terms of other news, right, something that's a little more popular in the current state of affairs is, hold on, where'd this go? Is student loans, right? The Biden administration is doubling down the efforts to cancel student loans and student loan debt with a new initiative that is aimed at forgiving the bill around 30 million Americans. While a college degree is still a ticket to the middle class, that ticket is becoming much too expensive, Biden declared. So I'm not stopping. The latest pitch builds on dozens of executive actions taken to cancel $146 billion for 4 million borrowers, which followed a Supreme Court decision from last summer that struck down a broader proposal aimed at eliminating nearly a quarter of America's $1.7 trillion in outstanding student debt. So, searching for alternative paths to debt forgiveness, the White House has amended the payments of public service workers and made changes to the income driven repayment plans. It also made debt cancellation available via administration adjustments and for borrowers with disabilities. The latest plan would also be targeted, impacting borrowers with balances greater than what they originally borrowed and those who have been in repayment for the last 2 decades. Eligibility would also be extended for students who attend institutions that couldn't participate in the federal loan programs of those who are at risk of default or other financial hardships. So when the Supreme Court struck down the president's boldest student debt relief plan within hours, we said we won't be deterred. Education Secretary Miguel Cardona declared, "Today's announcement shows that we're continuing to fulfill our promises. Expect additional legal challenges this time around, but the new measures could have more weight in court." So this is a main topic of conversation, realistically, as it surrounds the outstanding debt, right? The overall debt that I think that Jerome Powell is going to kind of fixate on, especially going into a presidential election as such, right? Instead of really, really narrowing down to inflation as things might perceive, right? So we'll see how this shapes up, but generally the consensus is whether we get a dip or not in this market, I think that it's going to get bought up fairly quickly. Um, in terms of other news, there's not too much. We saw yesterday's sideways range of nothingness. We barely moved anywhere. We traded the bottoms and the tops of the major range without too much anticipation that we're going to break. Now, I do have a slight lean to the downside, right? I am a little more on the bear side, looking for a bit of this downside momentum to take place. But that doesn't mean that I'm going to blindly hold positioning to see these cracks on the S&P 500 under 52.45, for example, right? We have to be understanding of the current situation in this market that realistically we're probably going to range, and this range is going to hold until we get the CPI that comes out tomorrow pre-market. There's a decent bit of volume shaping up here, and I think into the high 60, low 70, there's a very large barrier of sellers that are trying to hold prices out to keep these buyers at bay. And just like at the lows, the buyers are trying to keep the sellers at bay into that 45. So obviously a crack in either direction is going to be exceptional for the larger trend move that I think everyone's going to be waiting for, right? We're in very large anticipation of an expansion move that gets out of this multi-session range, right? We're still within Friday's value area. Right, being within Friday's value area, that's not too much wiggle room for prices. We're still within yesterday's overnight session range. The current overnight session is within yesterday's range. So yeah, there's a decent bit of volume. I'm going to be looking to see if the range can be played out, meaning that the top and the bottoms are expected to hold. I don't want to be that guy trying to look for breakouts getting absolutely nuked. I also don't want to be that guy playing in the middle of the range where we play with these mid to low 50s. You got areas that trade into the high 60s. You've got areas that trade into that mid to high 40, and that's about it, right? You got two key levels. If you want to trade at all, it's going to be activity within those, and I'm not necessarily leaning on this, but by some miracle, if we see some kind of expansion through this range, right, expect the continuation to hold out. Just because I lean a bit bullish doesn't, or excuse me, a bit bearish doesn't mean I'm going to be shorting every single pop I can possibly get my hands on, trying to nuke this thing down under 20, 30 points to the downside. That's just not what I'm in the market for right now. I understand that it's a range. It's going to be kind of a difficult situation, so I want to play that accordingly rather than getting too aggressive either side of this. So just keep that in mind. Low volume again, low volume from yesterday. People getting burned in these low volatility markets if you're not playing the extremes of the areas that you're given based on volume. So keeping that in mind, let's open up our live trading room. I hope everyone has a great morning and enjoyed your time here chatting about. So let's see if we can get the continuation of this range on the day's session, and we'll go from there. So happy trading. Tomorrow's CPI is going to be the main topic of conversation. It's going to be the main thing that we're going to be looking at. And I'm excited to see because realistically, right, the probabilities are stacked for us staying within this range and then seeing a larger expansion coming out tomorrow pre-market with the CPI data, right? That's where things lean towards, and that's what I'm going to be looking for realistically, and then try to play that expansion into tomorrow's session. So, with that being said, let's open up our live trading room. I'll see you guys in there. Remember, on Friday, we're going to be cooking up a live again, and check out community.tradeproacademy.com for our open Discord where we post plans